Hi, this video is about how much fees the direct mutual funds should charge to their clients, what the expense ratio of the fund should be. Now, direct mutual funds are those that do not compensate the advisors or the brokers for their salesmanship, for bringing in the clients, for bringing in the investors. So, the only compensation that the direct mutual funds charge for is the management fee that goes to the fund manager for managing the fund. So how much should that fund management fee be? Three factors can help us decide how much that fee should be. The first factor to keep in mind is that the fund management fee should not be greater than the outperformance achieved by the fund manager. So if the fund manager has outperformed the index by about 2%, then the management fee paid to the fund manager should not be greater than that 2%. Because in that case, if you were to do that, then it would not make sense for the investor to buy the active fund. Instead, he could buy the index fund. The second factor to keep in mind is that the fund management fee to be paid should be a percentage of the total outperformance achieved by the fund manager. So if the outperformance is about 2% over the index fund, so then the management fee could be a percentage of that 2%. That the 2% outperformance achieved over the index. Now, how much should that percentage be of the total outperformance? That depends on a couple of things. The first thing it depends on is the fund manager's expertise in that strategy. So the fund manager is is highly experienced in that strategy, and for that reason has a higher likelihood of outperforming the index. In that case, he could receive a higher fund management fee. The second thing is his track record in that strategy. If he has a good track record, then that too qualifies as a reason for higher fund management fee. And the last is how clearly stated the active management policy is. So the trading policy of the fund manager, how clearly stated that is. That too has an impact on the investor, and that's good grounds for paying higher management fee to the manager. And the last factor that decides how much the fund management fee should be in a direct mutual fund is whether they have sliding scale as regards the fees. So a sliding scale would suggest that as the assets in a fund go up, the percentage fees start to go down. So for the first $100 million, you may have 1% management fee, but for the next $500 million, the fund management fee could drop to 0.5% or 0.75%. So and that's done because it doesn't take more time and effort to manage the money. It's the same strategy, it's the same portfolio. So it doesn't make sense for the investor to be paying more money even when the fund has higher amounts of assets, and the fund manager is already properly compensated. All right, so these are the three factors that help you decide what the fund management fee should be in a direct mutual fund. Thank you.